when we quit our job, we didn't lean back and say like, hey, now let's chill. We basically says, we just found something really amazing. So let's take all the effort that we just gave somebody else, like that corporation that paid me $45,000 a year, and turn that into this business where we sometimes make $45,000 a deal. So our margins went down a little bit, but we were able to continue to do deals because the entire transaction didn't depend on banks. It was just people with money wanting to buy properties, people who needed money wanting to sell properties, no banks involved. We knew nothing about real estate when we started land flipping.
What's going on, everybody? Chris Naugle back for the Money School podcast, where we teach you how to take back control of your money by teaching you how to be your own bank. Today, we're going to have an unbelievable guest on, a guest that has lots of experience being his own bank, has a ton of experience in real estate, but a totally different concept. One that I know well because I took part in what he did. I learned it from him. I applied it. And we're going to get into all that. But today, you're going to learn how to do real estate without having to deal with tenants, without having to deal with toilets, and without having to deal with any termites. I'd like to welcome Jack Bosch to the show. How are you, man?
I'm doing fantastic. How are you, Chris?
I'm doing great. And you know, the cool thing about this is the second time you've been on this show. And I very rarely ever bring anybody back on the podcast for a second time, but your story is so unique. We were talking about some things offline right before we got this started that I think just everybody needs to hear about, because listen, in real estate, sometimes things don't go perfect. And I love that you were talking about that, but your plan and how you're handling it is just something everybody needs to hear. But before we get into that, I think everybody needs to hear a little bit about how did you get into real estate? Like, tell everybody a little bit about you and how you landed here.
Absolutely. So the short version is that I'm from Germany. My wife, Michelle, is from Honduras, Central America. And we met here in the US. I was coming here for a 10-month graduate program, finishing an MBA, and my job lined up, had everything lined up in Germany, had subleased my apartment, everything was ready to go. Well, 3 weeks into it, this young lady walks by, now my wife of 23 years, and I was like, hello, who is that? And so, long story short, I courted her for a long time. She was played really hard to get for a long time. And then finally we started dating. Finally, we realized, okay, this is actually serious. And then so we both decided, she was in her last year as an undergrad, and we decided that we could make this work and we wanted to give it a chance. So we both tried to find jobs in the US, and we did. We found jobs that would be willing to give us a visa, so we're legally in the country always, and important to say these days. And then we gotten through that job over 5.5 year process. I ended up getting my green card. But about 2 years into it, I realized that I don't like the employee life. I don't like the job life, and particularly, I mean, nothing against the US. I love the US. That's why I'm here for 27 years now. But in the US, I literally had 2 weeks vacation. I mean, it's stereotypical. Like, if you're listening to the US, it's like, so what's the big deal? Well, the big deal is that in Europe, you have 8 weeks vacation, right? And so it's almost like the hard pill of being an employee is softened over there by you constantly taking time off and going traveling, having things, and being so close to like Paris and Italy and all those kind of places. And in the US, you got 2 weeks vacation, and I was working in consulting where I worked 80 hours a week. And that got old very, very fast. So within a matter of a couple of years, I was exhausted. I was tired. I was like, I slept through the weekend and I had 100% travel. And now at that point, we were engaged. My now wife, we're like, I saw her on the weekends. That's it. I flew out Monday mornings, flew out Friday nights, and we just hated life. So I'm not a natural born entrepreneur. I never thought I would be an entrepreneur. Now I know that I think that was what I was supposed to do always, but I didn't ever know that was an option for me because nobody in my family is an entrepreneur. My dad's a high school teacher. My mom is a stay-at-home mom. My grandparents were farmers. I mean, it's nobody was an entrepreneur, like a true entrepreneur. Obviously, a farmer is an entrepreneur, but it was more like a small farmer. So bottom line is I hated it. I just hated it. I was like, this is not what I signed up for. There's got to be another way. So we started looking around through a lot of trial and error. We came across real estate, and then through a bunch more trial and error and failing forward, we stumbled into a piece of land that somebody owed property taxes on, and they were willing to give it to us for like $400. And we sold it. It was an acre in a small town, and we sold it to the neighbor across the street the same day for $4,000, like 10x our money. And then 2 weeks later, we got a large piece in a rural area, 40 acres for $500. Again, situation, the owners had passed away, the heirs didn't want it, and we turned around and sold it online in 10 days for $10,000. We're like, now we're doing this for like 2 months, and we've made $13,000. That's more than I'm making my job in a quarter. So we're like, there's something to this. So we put our blinders on. We couldn't quit our job at the time. We had to continue in our jobs because the green card wasn't there yet. So we basically started this part-time. Once the green card, a few months later, luckily the green card arrived. The permanent residency arrived. A couple of months later, I quit my job, and 18 months into it, we were officially hit the $1 million mark. And the rest is history.
Wow. So it took you 18 months of flipping land, starting with just that one chance deal that you got for, I think you said $400. That was the first one. Was that correct? And that's what that fueled this entire thing. But you've taken it to a whole nother level, because I remember, like I heard your story and I've seen you speak many times, but when I heard your story, all I remembered is I was flipping houses, because we did 274 flips when we had our TV show, and I had lots of apartment complexes, and I hated every bit of it. With the flipping, it was always something, always a problem. There was never any just harmony in it. And then when I got into the rentals, which was kind of like we're flipping, and I'm like, this is for the dog, the dogs. And then I flipped it over, and all of a sudden now I'm buying apartment buildings. But then I was dealing with tenants, and during COVID, all my tenants here in New York, because we're in Buffalo, New York, pretty much stopped paying rent. And that's when I just said, I'm done. And I sold all my real estate, which is right probably a little before when I heard about what you're doing. And I'm like, wait a second, I don't have to deal with any tenants. All I'm doing is I'm going out identifying through marketing, which I knew how to market for deals, identify the land. And then I'm just basically going to the neighbors, marketing to the neighbors that I got land. Do you want to buy it so nobody builds here? And that was what we did. When I went through your course, it was me and Dimitri. So Dimitri was a young man in my organization who basically had time, because I didn't have time. And he was doing all the marketing. He was doing all the calls. I was funding everything. I was writing the checks for the marketing. Yep. And that's how we did it. We had a lot of success. In the beginning, it was kind of a learning curve, but we had success with the land flipping. He went off to create a construction company, but he took what he learned from that and he applied that to his construction business. And now his construction business is buying properties and renovating the properties, and he's just crushing it. So I thought it was fantastic. Beautiful. I wish I found it earlier when I was spending all that time trying to flip houses.
Yeah. No, we built this pretty large. I mean, within a matter of 3 years, basically what happened is like we were able to do 63 deals in our first year. And in that first year, 10 of the 12 months of that year, we still had jobs. So basically, probably about 45 of the 63 deals were done while we are part-time, while we're doing this part-time. So what we decided was, when we quit our job, we didn't lean back and say like, hey, now let's chill, right? We basically says, we just found something really amazing. So let's take all the effort that we just gave somebody else, like that corporation that paid me $45,000 a year, and turn that into this business where we sometimes make $45,000 a deal, right? And we both basically started working 5-6 days a week on this business, because we knew that if we just do this for 2-3 years, we can be done financially for the rest of our lives, right? So because of that, we therefore grew this in a matter of 3 years to 8 figures, and volume, and then when the market changed in 2007 and 8, because we started in 2003. That's when I quit. October 17, 2003 was my last day at the job. Like June or so of 2004, we were officially millionaires. Then we built it into the 8 figures by 2006. By 2007, the market changed on us, of course, because the big recession happened. Real estate prices plummeted, but it didn't affect our business a whole lot. Because what it did, obviously, prices went down, but when you're dealing in land, you're dealing in a different market segment. Like, first of all, we're dealing outside of the loan world. We're not dealing with bank loans. Because what happened in 2008, 9, and 10 is banks simply stopped lending. So you wanted to have a house and you had a flexible loan, like variable term loan, and that house was going down in value. Even if you wanted to contribute extra money to that deal, you couldn't get a replacement loan. People in 2008, 9, 10, 11, they were literally losing their houses because their loans expired and they couldn't get a replacement loan, even if they had equity in the deal. In our world, 98% of the pieces of land that we're dealing with is owned free and clear. Right, so people have bought these pieces of land. We're dealing with 3 kinds of lots. One is infill lots, meaning take a street, 35 houses, 1 or 2 empty lots. They've been in the family ownership probably for 30 years. They bought it for 20 grand 30 years ago. They're worth 80 grand now. If you offer them 50, they're happy. You sell it to a builder for 80, made $30,000. Second kind of property is land in the outskirts of town in the path of growth. Again, same kind of situation. Banks don't even lend on those. So the only way people were able to buy those back in the days were by either seller financing. So they did a seller carryback. The seller did a carryback. They paid them off over 10 years. But now they have owned this property for another 10 or 20 years. Now they passed away. The heirs of the property, they don't want it anymore. They're giving it up. But now the heir owns a free and clear piece of land that they have no interest in. So, and then the third kind of property is like larger acreage in the more rural areas, meaning like your own mini ranch. Same thing. Banks would never lend on that. So when 2008 and 9 came, the value of these properties went down. But since they're owned free and clear, all it meant is that people sold them bought them for cheaper and sold them for cheaper. There's like when you have a loan that's a $100,000 loan, it's hard to offer the person less than $100,000 because they still owe $100,000. So you kind of like got a limit of what the prices can do, or at least what the person is willing to sell for. Because if they're selling for below what they owe, they got to bring money to the closing table, or you got a short sale situation. We didn't have that problem. Like we didn't have that problem at all. So in 2009, what happened is properties that seems like 2006, we would go into an area, we would offer $40,000 for a property and sell it for $70,000. And in 2009, we would go into that same area and offer somebody $20,000 for a similar property and then sell it for $40,000. So our margins went down a little bit, but we were able to continue to do deals because the entire transaction didn't depend on banks. It was just people with money wanting to buy properties, people who needed money wanting to sell properties, no banks involved. And that's, I think, made a big difference in how we were able to navigate this time period and how we were able to continue to go from there. But then the good thing, to your point, you've talked about houses and mobile and multifamilies. We ended up, we bootstrapped this all. But then once we into $1 million, once we were in the multiple 7 figures, we put a lot of the money into single families and then into multifamilies in order to protect us from taxes, because with the multifamily world, you get the depreciation, particularly once Trump came and put in that bonus depreciation rules back in, that you could basically buy, let's say you buy a $10 million property, you get a $2.5 million depreciation for that thing on day one. Now, even if I brought investors in, I still received $1 million depreciation from that in day one. If I have $1 million income that year, I get $1 million depreciation. I paid 0 taxes that year, even though I had $1 million income. Right? And that's obviously, we used it for tax strategy. We used it also for asset allocation, because you don't want to just have cash sitting around. I mean, even if you put it in your infinite banking policy, you don't want to just have it sitting there. We used it to invest in these multifamily properties, and we built up a portfolio of over 800 units that we currently own.
Wow. So you took what most people would look at the land flipping as, which is transactional. You've taken the profits from that, rolled that into actual properties that have, passive rental income plus the tax deductions, which is just a massive thing. You know, when people look at wealthy individuals and they say, why are they all in real estate? There's one answer: the tax reasons. Like, that's the reason wealthy folks buy real estate. It's one of the most important reasons. And I love that you did that, but that also opens up the door for additional problems that you don't have with land. And I agree. Like during 2008, 2009,
that. Yes.
yeah, we're going to hit that. We're not going to leave that one off the table. We got to talk about that. So, with land, I remember I was an advisor through 2008 and 9, and people just lost everything. But if you had land, like you were saying, you didn't really lose it. The pricing changed, but you didn't lose that land. And when I was doing the land stuff with Dimitri, the one thing I found really interesting, and I guess you always said it, but I just, sometimes people say things and you just don't believe it. You're like, I got to see it. You always said, always market to the neighbors first. Identify a piece of property and then market to the neighbors. Almost every property we sold, Jack, I don't know if you know this, we sold to the neighbors because the neighbors didn't want neighbors. They didn't, we'd buy the land from one of the other neighbors they didn't know, and we would sell it to them because they didn't want someone to build a house next to their house and knock the trees down. Yeah. And that's how we did almost every deal. We never even got into
neighbors buy for 3 reasons. They either buy because they know what's going on in the area and that prices are accelerating, and they're like, well, let me grab something because it's a great investment. They buy because they want something for a friend or relative of them, but they get like, oh, my kids want to move out and move close to us here, so let me buy a piece for them. Particularly if it's like nice hilly mountain area with pine trees and things like that, then they're like, well, they want to build a cabin. We live here, but they want to build a cabin close by. Let me buy that piece for them, or let me help them. They call the kids and, hey, this piece of land is for sale. And even though you might technically not sell it to the neighbor, but you sell it to the kids of the neighbors, and it came by contacting the neighbors. And the third thing is exactly what you said, which is actually more often than not the number one reason, is they want to buy to preserve the area as is, so that not more people move in. It's a little counterintuitive, but it's actually what a lot of them do. Yeah.
And I remember one specifically that Dimitri was negotiating, and the people took a home equity line of credit on their primary house and used it to buy that land. And that's how they funded the deal. And it makes all the sense in the world, because really now they could connect the two pieces of land. Now they're just increasing the value of their house. So it's a fantastic business. I mean, one that, like I said, I wish I learned earlier, but let's just go over real quick. We'll put a pin in the land flipping for a second, because I want to talk about your students. I want to talk about Lori. I want to talk about some really cool things there. But I want to come back over to how you took money from the land flipping and you started moving it into buying rentals, and you have a bunch of them. Can we just talk about some of the pitfalls people need to be careful of with, different multifamily properties? So, and if we can just talk about your situation.
Yeah. So our process was we knew nothing about real estate when we started land flipping. 3 years into it, we still knew nothing about real estate. Because we have done, at this point, we're doing 500 deals a year or something. We still knew nothing about real estate, I like to say. Because all you do in land is you find a person that doesn't want a piece of land anymore. There's 46 million pieces of land, and usually about 5% of the people don't want their land anymore. So we're talking about 2.3 million pieces of land and a few thousand people that now do this in the US. So competition is low. Everything is cool. So we go after these people. All you need to do is find them, which we have a method for. Then you get in front of them, make them an offer, put that deal under contract at 10 to 50 cents on the dollar, turn around and sell it and make money in the middle. You don't hold on to the land. You don't keep the land. Therefore, market like price deviation don't play a role. We never touched the house until 2009. 2009, I go to a RIA. I'm an active real estate investor. I belong to a Real Estate Investors Association. I go to a RIA meeting. I sit there, and they talk to me about house prices being 80% down. I did not even know. I was not in the house space. I was not informed about that. And I was like, what's going on? $200,000 house?
Sorry, I'm laughing over here because I'm just trying to just think of one person I know that literally didn't know that prices went down in 2009. You are probably the only one.
Yes.
The only one.
Because we put the blinders on, because we got this land thing. It works. Ignore everything else. Just do one deal after the other. Make money. It's simple. Cookie cutter. Get it under contract. Get a $30,000 piece of land under contract for $6,000. sell it for 20. Like cookie cutter, tell the title company. I don't even have to see it. Just like it's simple virtual real estate for investment from home. You don't need to know about kitchens. You don't need to know about bathrooms. You don't need to know about anything. I saw the frenzy out there. It's like, whatever these people do, let them do. I'm making 7 figures a year over here. I'm good, right? So now I go to the RIA meeting and they're like, prices have gone down by 80%. There's $200,000 houses that sell for $50,000. So I was like, excuse me? I go home, talk to Michelle. We pull up the MLS. And because I have a real estate license on top of it that I don't even use. And had it for like 20 years now. And we look at it as like, indeed, there's houses for $40,000, $50,000, $60,000 that 2 years ago sold for $250,000. We call a realtor friend of us because I don't represent myself. I don't do, even if I sell something, I hire a realtor for it. It's like, Jill, we need to go and buy houses. Because at that point, we had $71,000 a month in cash flow coming in from land because we sell a lot of our land with seller financing. So there's $840,000 a year coming into our bank account from us carrying our own notes and allowing our land buyers to pay their land in monthly payments, all of which is profit. And I was like, we got enough money just from the cash flow to buy 1.5 houses a month. Let's go. So we bought something like 50 houses over the next couple of years, like 2 houses a month, just cash offer, and bought these houses. And luckily kept them in most markets for a while. Like the ones in Phoenix, we only bought 18 because we still have 15 of them. We own Phoenix, they're worth $400,000 to $500,000 now. The one bought a portfolio in Cleveland, Ohio, and bought a portfolio in Omaha, Nebraska. After like 2013, prices went a little bit higher. We ended up buying in other markets and so on. But now to the pitfalls. So the houses in Phoenix, when you buy at $50,000 a month, very little can go wrong, except there's still stuff can go wrong. So, for example, same in Cleveland, we bought $60,000, $50,000 houses, put $10,000 in, rented these houses. What we didn't consider on these houses is that they were 1920 and 1930 built townhomes, bungalows with a basement and 100-year-old plumbing, like probably 50-year-old electric and stuff like that. We held these properties for 4 years in Cleveland, actually more like for 5 years. I don't think we made $1 in cash flow on those properties, even though we bought them for $60,000 and they're rented for $1,000 a piece. Now you look at the numbers, they're on top of it, free and clear, no mortgage. So you're like, how in the world do you not make cash flow on those? It's $1,000 in rent. Let's say $100 goes to a property management company. $100, let's say, or $150 goes to property taxes. $750 a month. You should be making $750 a month on these things. Well, yeah, except for they were in middle of the road neighborhoods. They were in the first suburb out. So nice neighborhoods, not a slum, not a ghetto, like police officers, nurses, and so on live in the neighborhood. But still, people trash the houses. One time, somebody lived in the house for 10 months. It took us $15,000 to fix that house. The cash flow of 2 years just went out the window after 10 months. And that's how we didn't make money. Plus, on top of it, these houses were like 80 to 100 years old. Now, the month passed. Every month, you're like, yay, we're making $15,000. Oh, sorry, we need a new boiler and we need a new air conditioner and we need this here. Oh, I'm sorry, we have a leak in the foundation. We need to drill it open. We need to do this. That's a $20,000 bill. That's a $10,000 bill. That's a $7,000 bill. That's a $15,000 bill. We basically essentially renovated all these properties over the next 5 years, but it ate up 100% of our cash flow. Didn't make any cash flow on these properties. Now, at the end, the good end of it is we sold them all in Cleveland, and we sold them for an average of $50,000. So we still, over 5 years, tripled our money. So that's good. But for the investor wanting to buy houses for cash flow, be very, very careful what you buy, where you buy, what your tenant profile looks like, and how old your properties are. Like,
Yeah, Jack, we got up to 91 doors when we were, hot and heavy on the rentals, and in the exact same thing. I mean, it was just every time we felt like we were getting ahead, a main sewer line would go, which was always a $5,000 bill. And then once you got that and you start recouping from that, there's a leak in a roof. And then when that happens, a water heater goes. It was just endless. And you're right. After a period of time, you're just like, all this cash flow that we thought was going to make our life easier just went to make all the service providers more money. So the only way we made money is the same way you made money, which was on the exit, which then this is the scary part. We loved the depreciation during the time we owned those properties, and we took it every year. Then I sold them all. I flash sold them all.
At the recapture.
And then I had the recapture of the depreciation. Uncle Sam sent me a bill. I looked at it. I'm like, Uncle Sam, you got this wrong. Like that number is way off. Oh, no. It was right on, because they were recapturing all the depreciation I took all those years. So if you're going to get into holding real estate, just realize the tax situation is great until it's not. And that's one thing I think.
Or you got to keep going is the thing.
You do.
Because, for example, we sold a multifamily property, made a very, very nice profit on that thing, a significant profit that we would have had to pay hundreds of thousands of dollars of taxes on. But what happened is that same year bought another multifamily property that again had a huge depreciation that offset that. And therefore you can roll it over again and again and again. And eventually you can even roll it over beyond your death into your children's lives, and they can keep rolling it over. So there's ways that you can roll over and avoid these kind of things, but not if you exit. If you exit, at some point of time, you got to pay the piper, right? So I was
ready. I was so done after the pandemic. I was so over it. All I wanted to do was be the lender. I just wanted to be the bank and lend money on real estate. Somebody else could do all the hard work. I wanted to lend. And let me go back to the land.
This is, by the way, why we don't buy in states like New York. Like, I'm being offered properties in New York all day long. I just don't buy them. We only buy in essentially in red states, because traditionally red states, because they're traditionally much more landlord friendly. Like my properties in Phoenix, if somebody doesn't pay, I know during COVID you couldn't do that, but if somebody doesn't pay, in a normal world outside of COVID, I can evict them in 21 days.
Hey, you're looking at the map nowadays.
In another few days and be ready for rent 30 days later, be filled up again. So I lose 1 month of rent plus $400 or $350 to the attorney. In some states like California, that might take you a year to do that, and you use a full month's worth of rent. Now, again, in some states, people know that eventually COVID's going to go away, and then they're liable for it. So my properties had very little people that stopped paying, but in one property we had 10% not paying, and everywhere else people kept paying. But I can totally see that in some states, they know that the repercussions of not paying are 5 years down the road. And so they're like, I'll take that risk.
Your real estate business lives and dies by the network and the connections that you make. I mean, after all, your network, well, it's your net worth. That's what you always heard, right? If that's an area where you desire improvement, well, Private Money Club, it's for you. PMC saves you precious time and money by bringing the real estate world, well, right to you, right in the palm of your hand. So get in on the action like so many others have by going to privatemoneyclub.com and sign up. You're absolutely right. You definitely, I would advise anyone listening to this, just stay away from New York. It's a terrible, terrible state. We still have some rentals. I've been trying to evict one lady from a property, and she's now 4 months in. And all the courts do is just keep pushing it to the next month to evict her. And if she makes 1 cent of a payment, it kicks her again. It's just like the laws are so backwards. But the good news, Jack, if you're only buying in red states, if you look at the map today, your buying zone just got huge.
Yeah, no, that's the election map. That's still not.
I'm totally kidding.
It's not the regulation map.
Maybe it's too soon. Maybe it's too soon. Some people are a little upset, but that's I had to do it. I had to. So let's go back to land. One of the things when I was doing land that I saw a huge opportunity, and I want to just bounce this by you because I don't know if I've ever heard you talk about it, but being a lender, the way I looked at it is if I bought land and I sold it to, let's just say, the neighbor, because that's what we were having success in, I could offer to hold the paper on the land, and then the neighbor who's buying that land would give me a down payment, very varying amounts, and then make monthly payments, and I would just charge them interest. And I would do that for my policies. We did one like that. They ended up just buying us out like literally 6 months after, but we did one like that. And I took money from my policy, and that's what I used to basically finance the deal, and they just made payments back. I think we were at, back then it was like 6% or something. I mean, is that something that's common in land flipping?
Yes, very common. As a matter of fact, I mean, every single one of my deals that I offer with seller financing. We currently probably sell 60 to 70% of our land pieces with seller financing.
That's fantastic.
What I mean by that, though, is there's two ways that this can work. My favorite way, and then obviously the way that you have explained it, which is my second favorite way. The favorite way is that you get the land for so cheap that when you offer seller financing, and seller financing very simply is exactly what you said. So if you have a property for sale for $50,000, and somebody says, I would love to buy this property, but I don't have $50,000. Would you allow me to give you a $10,000 down payment and pay the remaining $40,000 in monthly payments of $500 until it's paid off? And you're like, sure. But I have to, because I haven't received the $40,000, I got to charge you interest on the $40,000. So you arrange for an interest rate, which, by the way, should be more than 6%. It should more be in the 12 to 15%.
This was back when rates were still really low.
Still, even there, like land, because here's the thing: if a bank, like today, I mean, again, the rates are much higher today than they were back then. But if a bank would give you a loan on a piece of land, they would require you to put 50% down, and they will only give you a 50% loan to value loan. So you have to come up with, in this $50,000 case, you would have to come up with $25,000, and meaning the risk to the bank is really, really small, because after you put down half, the likelihood of you defaulting, or even if you do, the likelihood of the bank selling it for less than $25,000 is and not being whole is minimal. So the bank's risk is minimized. Yet in today's world, the bank still charges you 10% for a loan like that. Now,
Smart.
if you go to that same person and say, like, don't worry, you don't have to give me 50% down. You can just give me 20% down. You can just give me $10,000, and I'm willing to carry the other 40. Shouldn't you be willing to charge a higher interest rate? Shouldn't you be able to charge a higher interest rate? Because technically you have more risk, right? Because if they stop paying, you have to foreclose on them, and who knows if you can get, again, $40,000 for that property. So therefore, there's a little bit more risk for you. And so you should charge higher interest rates. So charging 12 to 15% is very normal in our world, and so on. Now, the ideal scenario is, though, that you do that on a deal that you only pay $10,000 for. So therefore, you wouldn't even need the money out of your whole life insurance, of your infinite banking policy insurance, because you basically put the deal under contract for $10,000. Then you market it for $50,000. Somebody gives you $10,000 down. You use that $10,000 to pay the seller. Now the seller is happy. The buyer is happy because he's done. You haven't made any money yet, but you also just bought a property using none of your own money, sold it using none of your own money, and now you're receiving $500 a month payment for the next 15 years, which means your profit's going to be $90,000 without using a dollar out of your own pocket. That's our favorite deal. Go ahead.
I was just going to say, I wish I would have done it that way. Boy, it didn't work that way, but it still worked out. It just wasn't that good.
The second favorite way is, what if you have that deal under contract for $17,000? And same deal, worth $50,000, you have it under contract for $17,000, and somebody comes and says, hey, I can give you a $10,000 down payment. In that case, you can do the same thing. You use $10,000 to pay the seller, but now there's $7,000 missing. Where did $7,000 come from? That can come from your policy. So now your policy pays $7,000. The seller is taken care of, but now the cash flow from that deal goes 100% goes into your insurance policy, and they still owe you $33,000. And that's probably going to be paid off over 12 years at $500 a month. So that's still $60,000 that hits your policy for a $7,000 investment. And that's not bad either.
No, I like that a lot.
Yeah.
So like with all this stuff, I know how it works, but just the audience, I don't think at this point knows, like you guys teach this stuff. And one of the unique things is when I became, a customer, when I became a student is the proper word, of your program, and me and Dimitri did it and we learned, I started talking about it in my community, what we were doing. And then one of our longstanding, just awesome friends, Lori, heard about what I was doing, also went through the program, but her success story far outweighs anything I could ever talk about because she's just crushing it in land flipping. Do you want to talk a little bit about her
now? Because she's doing that. I don't know how many deals a month. She was able to retire her husband. She was able to buy a house on the lake. She does lots of seller-financing deals. And then what she does is it's another strategy. Once she does a seller-financing note, once she carries back this $33,000 in the example we just brought, she goes and sells that note. And then she basically, for $30,000, and she gets an extra cash influx of $30,000 on that deal. So that's a $30,000 cash profit that she makes. And she does those deals left and right. She's our note selling queen. She is a note selling expert. She's doing extremely well, blowing up her business into I don't know where she is, but in the high six figures for sure. Yeah.
I didn't know she was doing the notes with it. I mean, I was just with her this weekend at our Money Tank, our private money club event. And she didn't mention that, but that's fantastic. So she's literally doing what we just talked about, but then creating the notes from that and then selling the notes as well.
Yeah. When you take a seller financing thing, when you basically that agreement that says, yes, dear Mr. Buyer, I'm going to allow you to pay off this remaining $33,000 or the remaining $40,000 or whatever it is, over the next 15 years, right? That's actually the right example. So you sell it for 50, you get a $10,000 down payment. They still owe you $40,000. So you pay that off over the next 15 years at $500 a month or $6,000 a year. That's a $90,000 cash flow stream coming in over 15 years. But the note, they still owe you $40,000. That's written in a piece of paper in an IOU, in a credit agreement that says, hey, yes, I owe you $40,000 and I agree that I'm going to pay that over the next 15 years in monthly payments of $500, including interest and extra XYZ. That document is worth $40,000. Right? So you can take that document and put it in your drawer and collect money on it every month. Or if you need cash, you can put that document on one of the many note platforms out there and simply sell it. Or perhaps in your network, you can perhaps sell it because there's people who want to give other people money and people that need money, right? So I don't know if that's something that your network would do, but there's also professional note selling networks like PaperStack and other ones that you can go out there and you can literally put your note up there with the terms. And then private investors say like, yeah, I'm interested in that. I offer you that much for it. And Lori, for example, she has sold notes for 97 to 99% off the actual face value of the note.
Wow.
Yeah.
And she teaches all this through your program too, right?
Yeah. So she is one of our coaches. We teach our land strategies, how to do exactly what you do from the comfort of your home. And it includes cash deals, includes seller-financing deals, includes small deals, includes large deals. It includes some advanced kind of strategies like that, for example, where you how to sell the notes. It includes also land splitting, because one of the most profitable things you can do is take a piece of land and instead of we typically do wholesaling, or instead of just taking, let's say, one of our students just is doing that. She's actually lives in Germany, does deals in the US. She's married, 2 young kids, and works 2 hours a week, 2 hours a day from Monday to Friday on this business. And one of her deals, she's about to make about $140,000 this year, part-time. One of her deals is a piece of land that she got for $60,000. So what she did is she joint ventured. She went into one of her networks and she borrowed from an investor, like probably in your network, that would be perfect. Somebody borrows $60,000 to buy the land. In exchange for that, the person that gave her the money gets a part of the deal. So it's a very profitable proposition for the lender too. So she bought the property, and in a normal situation, the property is worth about 120. She got it for 60. so half price. In a normal world, she would turn around and sell that property, put it on the market, and sell it in a couple of weeks for $90,000, making herself a $30,000 profit, which we split whichever way with her investor. As a matter of fact, and if it's a wholesale deal, she would need an investor. She would just put it on a contract, put it up on the market for 90, sell it, make $30,000, all good, walk away.
Wow.
Because you can do it with an assignment, or you can do a double closing and things like that. You don't need the money. You don't need the 60. But in her case, she wanted to actually split it. So she took the piece of land, she borrowed the money from an investor, bought it, then she split it into 4 pieces of land, and now she's selling every single one of them for an average of $60,000. So she paid 60 for all of them, and she's paying the first one for 60, got all her money back, and then the other one have another $180,000 profit in it. So if she gets half of that, she's just taking her profit from $30,000 to $90,000. If she gets 2/3 of it, it's 120, or whatever her arrangement with the lender is. I don't know what that is, but she definitely, but just by splitting it, and Lori teaches those things too. She has done those kind of deals. She's amazing. As our other, we have a total of 14 coaches in our company.
Wow. Yeah, that's incredible. I mean, that's what every developer does for the most part. They buy tracts of land and then they just parcel them off and sell those parcels. And that's how they make millions of dollars. Builders do the same thing. I mean, she just did the exact same thing, but she just did it from Germany in 2 hours every day that she's working on this. That's fantastic. That's going to be a heck of a case study right there. I'll tell you.
Yeah.
So, folks, we're going to put all the information so you can learn more about what Jack and his company and Lori are doing in the description. But Jack, just real quick, where can people learn like the fundamentals of what this is and how it works?
Yeah, absolutely. So obviously I have a podcast too. It's called The Jack Boss Show. And I also have, but the simplest way is to simply go to a link called Land Profit Fun, like having fun, landprofitfun.com. Because when you go there, you can actually download a 30-day blueprint, which basically is a very detailed document that gives you day-by-day and step-by-step instructions how to build your own, how to set up your own land business over a 30-day period. And then, of course, you can look at YouTube. There's Jack Bosch, it's my profile. There's like a 7-part video series where I explain how this works. It's 7 times 10 minutes. So basically, in an hour and 10 minutes, you can be through all the basics of it. And there's many other different ways you can find us.
Well, we're going to put both of those. We'll put you said it was landprofitfun.com. Did I get that right?
Yes.
Okay. And then your YouTube is just
like having fun. Yes.
Yep. Won't forget that. And then your YouTube is just your name, Jack Bosch.
That's correct.
Okay, perfect. We'll put those up in the description, but folks, yeah, definitely check out that landprofitfun.com because, hey, sounds fun. You might as well learn how to do this. With that being said, like Jack, what are some other things that we can hit as we kind of wrap up this episode? Any cool stories?
You wanted to talk about the problems on one of our multifamily properties.
Yeah, I thought you were going to leave. I thought you were going to kind of skip right over that because sometimes like I hear things and they're like, I really don't want the public to know.
Can we
talk about that?
Like,
all right,
that's
what
thing,
we're going to finish up with.
I love my land business, and every day that I have to deal with some of the multifamily stuff, I love my land business even more. Because again, there's no tenants, toilets, termites, there's no construction, there's no roofs, there's no air conditions, there's none of that stuff. You simply find a seller that use our method to find lots of sellers that don't want their property anymore. You put them on contract for 10 to 50 cents on the dollar. You turn around, use our marketing methods to sell the property, make between 5 and 500,000 in some cases, but usually between 5 and 100 grand profit on a deal. And you do that again and again and again and again. And you build a multiple six-figure business. The problem with that, obviously, is that when you make a lot of income, you have to basically pay taxes. And that's when we started going into these kind of assets. And it's all is beautiful until you get hit by a hurricane. So one of our properties in Louisiana, 94 units, was hit by a hurricane a couple of years ago. And the insurance company simply refused to pay. And so it's a multi-million-dollar damage. And that really, I think what I'm going towards here is like the most important thing to say about that is if you invest with anyone out there in the multifamily space, ask a certain amount of questions. Number one, what is their experience already? How many full cycle deals have they made? And have they done full cycle deals in an environment that was not all roses? Anyone could have done a full cycle deal by buying a property in 2017 and selling it in 2019. Anyone could have done a beautiful deal if they bought it in 18 and sold it in 22, right? Anyone is like, because it was just an upwards channel. If you make mistakes, the market was forgiving. The market rescued you from your own mistakes by simply prices that went up. Ask them if they have done deals in difficult environments and what happens when these difficult environments happen. Number two, ask them if they have money on the sidelines in order to protect their investors from capital calls and from stuff like an insurance not paying. If the answer is no, run. Okay, run, because here's the thing. So what happened in our case? This property got hit by a hurricane. Hurricane went back and forth with the insurance. We ended up having to sue the insurance. Finally, after all the different time periods expired, we finally were able to start the rehab process. We have had to put over $3 million into that deal of our own money. When we walk out of that deal, we're probably going to be losing $1 million net, or $1 million on that deal. But we have done it because the alternative would have been to walk away from the deal and have our investors lose 100% of their money. And on top of it, of course, our credit worthiness would have been shot with the banks because we would have walked away from a loan, right? And et cetera, et cetera. And simply, this is not what my wife and I stand for. So we stand for that. If we stand for being the stewards of our investors' money. Now, what that means is that we took on the pressure, and thank God we had a whole life insurance policy that was well funded and well designed through you, right? Because that thing was sitting on a ton of cash that I hadn't used for something. It was just sitting there, accruing and growing by 5-6% per year, and better than sitting in the money in cash, because I was able to use that money as a large percent along with another line of credit and actually bring that job to an end. So now that job is almost finished. At the end of the day, we're probably in January, February, the latest, we put that property on the market. When we put it on the market, we can pay the lender off. We can most likely pay our investors most, if not all, their money back. Hopefully all, and most likely all. And that's kind of what we stand for anyway. And at the end of the day, we'll still walk away when we get a bunch of our money back, probably not all our money back. But the bottom line is we stepped in because we had to. We stepped in because it's what we stand for. This is what you do when you have a proper when you get into that business. When you take on other people's money, you got to make sure that you know what you're doing. You got to make sure that you have enough reserves to make sure stuff is you're protected and you're able to act when the shit hits the fan. Now, since then, the insurance has settled with us for way less than we needed to, but at least some money has come back that way. We're able to, with that, finish also the rehab work and so on and so forth. But the bottom line is, this thing has cost me years of my life. This thing has cost me gray hair. This thing has cost me sleepless nights. But at the end of the day, we had a choice: walk away and leave our investors stranded, or do whatever the heck we can to protect our investors' money. And we obviously chose the second path. And that's some of the downsides of real estate. Sometimes you win big and sometimes you lose big. And you got to be willing to stomach a big loss, because in our way, if we walk away from that deal and our investors get 100% of their money back, if the bank gets 100% of their money back, we get most of our money back, that's a win. Because you know what just happened? We now have a better reputation in the market. We have our credit worthiness established. We actually already had a win, because of that, word got around in some of the lenders, and we're getting phone calls from people like, hey, I heard you're not walking away from that deal. You're doing the thing. That's a good thing. Hey, I have another deal here. It's a distressed deal. And because of that, we were able to buy a smoking deal earlier this year, 91 units in Fort Worth, Texas, where somebody else walked away from the deal, and their investors lost $4 million on that deal. We were able to buy that thing basically at the loan amount. And that deal is already worth $3 million more than we bought it for. So that's going to be our big win. And in life, you can't look short term. You can't be like, ooh, no, you got to take the long term look, you long term view. And basically, if I'm already in this industry, I'm going to do it this right way. I'm going to protect my investors. I'm going to protect my thing. Because if I do this the right way here, it's going to open up so many opportunities over here. And that's what we have done. But is it fun? No, it's not fun right now. It'll be fun when the deal is sold. It'll be fun to think, but it makes me love my land way more than it ever did before.
But the one thing there that I hope everybody who's listening, and thousands of people download this, and I think the one thing that's going to resonate is that you stood and took it so that your investors didn't lose. And there's so much to be said about that. We could do a whole episode on just that tiny little topic, but that protecting of your reputation, protecting your name, and protecting your investors first and foremost will serve you the rest of your life, because that's the most important thing. And I think a lot of people, they get scared, they get in hard times, and they just bail and they leave a whole bunch of hanging and they're like, hey, sorry, it just didn't work out. But that will haunt them their entire life. There will never be a day that will not come back and visit them. So good for you. Kudos for doing the hard work. And that's really what it is. And folks, I hope you heard that, because there's very few people with that kind of integrity. And I think you can take that integrity, you can take it just to how he handled that property, which sounds like a just terrible situation. I mean, hurricane hits it, insurance doesn't pay, and you're just coming out of pocket dealing with everything.
We're not talking about the duplex. We're talking about 94.
No, 94 doors.
Yeah.
Ouch. But I think with that kind of integrity on that trickles down to all your businesses. And that's just how you run your business and your life. And I think there's a lot to be said about that. So folks, we're going to put landprofitfund.com in the description. Check it out. Get around the campfire and check out what they're doing, because, hey, listen, hurricanes, last time I checked, don't really do a whole lot of damage to land.
They got that. Exactly right. Like the hurricane pass over, they topples down some trees, but the land is just as beautiful after.